And with that, we'll have to wrap up our conversation. But many thanks for your time and joining us on Startup Street. And we'll surely keep a track of all your IPO plans. Thank you.
Thank you, Shruti. Good to be here.
Payments platform Easebuzz has raised $30 million in a Series A funding in a mix of primary and secondary rounds led by Bessemer Venture Partners. Now, the company says this funding is going to help Easebuzz expand its vertical SaaS stack, enhance product capabilities in online payment aggregation, and strengthen its merchant network and market penetration. Now, Easebuzz is also entering the offline payment space with POS machines and UPI QR-based soundbox solutions. For more on their plans ahead, joining me now is Rohit Prasad, the founder and CEO of Easebuzz. Rohit, thanks very much for your time here on CNBC TV 18. Start by telling us briefly about this funding round. How much of the $30 million that you raised is primary and how much is secondary?
Sure. Thanks, Ritu, for having me here. So we've raised overall 240 crores of Series A funding, in which about 180 crores, 200 crores, is primary and 40 crores is secondary.
Okay, well, how do you plan to deploy this money then? What kind of product enhancements are you looking at? And how do you plan to strengthen your merchant network?
Yeah, so we would be basically investing mostly in the new products that we would want to build. Apart from that, some leadership hiring will happen this financial year, where we will invest some of the amounts, and also new licensing activities where we're also planning to go into cross-border payments. So these are three major heads where we will invest, apart from marketing and usual operational activities that is also there in the picture.
Okay, so when it comes to entering the offline payment space with point of sale, UPI, QR, solutions, what are the plans there? How soon are you looking to launch these products, and what kind of additional revenue will this unlock for you? Also, this space is quite dominated by a few large players in the market. What kind of market share could you carve out?
Sure. So we are already strong in the online payments, where we are building solutions around payments for merchants, and we are basically verticalizing it with respect to different industries. So we go deeper than any other PA. And what we are doing in offline is that we are basically adding up to the wallet share within our existing online merchant base. So overall, if you look at about 2 lakh merchant base that we already carry, all these merchants will be given an offline particular product, which basically they can use for the counters or face-to-face transactions. And that will add up to the overall revenue. I believe that about 5 to 10% of our revenue share next financial year should come from offline. And we should see a market share in the next 2 to 3 years.
Well, Rohit, you said you have about 2 lakh merchants online. How fast is this base growing? And how many more merchants do you expect to add in the coming year or so, especially as you also foray into the offline space?
So overall, we are adding up, I would say, about 5 to 10,000 merchants on a monthly basis. We see that all these merchants mostly are small, medium-sized merchants, usually in the range of about 10 to 50 crores of turnover. We are very strong in some sectors like education, BFSI, real estate, and even in government municipal corporations, where there is a lot of informal activity in terms of the transactions that they do. So we believe that we can digitize them faster than anybody else, and we're also winning in these sectors. So these are the sectors which will add up in the next financial year.
Well, you have the final authorization from RBI for an online payment aggregator license. You're also in the process of applying for a cross-border payment aggregator license. What exactly are the plans on this front? How soon do you expect to have this in place?
No, so we are in the process of applying, and we should be basically getting this license because we've already been authorized for PA. So hopefully this process should be faster for us. That's what I'm assuming. So hopefully this financial year is when we are assuming this license to come.
Well, we also understand you're eyeing a public listing in the not so distant future. What are the plans on that front? What should we expect overall?
Yeah, sure. So we are a profitable entity. We've been profitable since last 5 years, and we basically are building in a more sustained manner because we are cost effective and we're a little conservative. So overall, we feel that we will be ready for an IPO stage by 2030 because we are growing well. This year, we should be at about 650 crores of revenue with about 25 crores of profit after tax. And in the next 3 years, we assume our revenue before IPO should be around 2,000 crores with, profit should be around 100 crores is what we assume it to be. So that's the size at which we want to go to a public stage and, of course, build not only for India, but also for the global market with similar kind of use cases that we built for India. So that's the idea.
Well, I have to ask you about the most hotly debated topic in the payment space today, and that is the merchant discount rate, or the MDR fee discussion. What are your expectations on that front?
I think it should be, because UPI in itself has become very popular, and we've seen almost every second transaction happening from UPI. So the kind of infrastructure cost that anybody incurs is very high, and we assume that it should happen anytime soon. But for Easebuzz, it's not something that affects the business, because we are more of a software solution provider. We are a SaaS company which has built itself on the payments infrastructure. So we basically book our revenues on the SaaS model, and revenues basically comes from the GTV that we process from the platform. So overall, we basically make revenues from the SaaS that we enable for our merchants. But having a UPI play would basically increase our top line revenues a lot. And the kind of volumes we see, obviously, that will add up to the overall gross profits as well.
Okay, and finally, what are the longer term plans for the company? Any white spaces you want to fill in, new products or distribution that you're eyeing?
No, so we want to be a tech company, and we will remain a tech company. We don't want to be a financial institution. I think there's a lot of white space around the B2B play, where there is supply chain driven business, where we have built something on the Bharat Bill Payment Operating Unit. We launched this in the last Global FinTech Fest with NPCI. And this product is something that we're really positive about, because we are the first aggregator who has built the B2B flow on Bharat Bill Payment Operating Unit. This is one of the first products that will help the suppliers and buyers to come on a single platform and have a complete invoice management solution with a subscription-based management system enabled for automation. So I think this is going to be a big play, because ultimately the supply chain driven business is very informal in nature, and that will add a lot of value, I think, for the ecosystem. So that's something that we're really going after.
All right, Rohit, we'll leave it at that. Thanks very much for your time today on Startup Street.
On that note, it is time for